There's more great mortgage news on the horizon. Danilo Jokanovic here with the Betsy Wang team at RE/MAX Escarpment. The Office of the Superintendent of Financial Institutions in Canada said it's going to end a policy that created an imbalance between uninsured and insured borrowers. The regulator says it's no longer going to require borrowers with uninsured mortgages to undergo a stress test when switching providers. The regulator said it will end the policy for lenders to apply for minimum qualifying rate to straight switches when an uninsured mortgage is renewed at a different institution under the same amortization and loan amount. The regulator says the change comes after feedback from industry and many Canadians about the imbalance between insured and uninsured mortgages at the time of renewal. It also said that the data showed that the risk requirements that it was intended to address have not materialized, meaning people are making their payments. In March, Canada's Competition Bureau also recommended allowing uninsured mortgage borrowers to switch between banks without undergoing the stress test, saying that the policy was not applied evenly to all Canadians. Now, the stress test requires federally regulated financial institutions to ensure borrowers can still make mortgage payments if they experience financial shock, such as an increase in mortgage interest rates or an increase in household expenses. The regulator says it's working with financial institutions to ensure they're prepared for the change, which it intends to formally communicate as a part of its next quarterly release on November 21st. Since 2017, uninsured mortgages have predominated in Canada, overtaking insured ones for the first time that year. From 2012 to 2019, the outstanding value of uninsured mortgages grew by an average of 3% quarterly compared to a decline of 0.4% in uninsured mortgages. To put that into perspective, in the second quarter of 2014, only 10 years ago, total residential mortgages were at $983 billion, of which 40% were uninsured. Now, compare that with Q2 of 2024, there's $1.64 trillion in residential mortgages, an increase of 67%, of which 74% is uninsured. This is a great move that's going to allow many Canadians to more easily renew their mortgages. As to what impact this is going to have on the market is yet to be seen, but I believe it's going to have a stabilizing effect on the market, allowing those who would have otherwise had to sell because they may not qualify for a mortgage renewal to stay in their homes. One more thing, very important, no one's saying it, but it seems like the signal is that this stress test is potentially open to negotiation, and I sincerely hope that in a climate of decreasing interest rates, the government will consider easing or entirely removing the stress test for home buyers, giving many people access to homes. If you guys want to know how this will affect you exactly in your circumstance, give us a call. We have a great network of mortgage specialists and industry experts that will help you figure out how these rules might affect you. Take care, everyone, and have a great day.